Hello there, and welcome to another segment in episode 3 of Real Talk. Now, in this episode, I want to touch more on the market and more about exposing the truth about the market and how it moves. And we've dived into quite a lot so far. Not everything I'm going to give straight away because it is a very deep rabbit hole that I believe takes time to understand. But today, I have got a calculator in front of me and we're going to work out part of the market share. So let's go through this. I've got the top 10 currency traders, right? Now, this figure is a few years old, right? But it's probably gone up since then. It's not going to go down, is it? So let's get straight into this. This is overall volume. We've got Citi coming in at 14%, right? Then we've got JP Morgan coming in at 10%. We've got UBS coming in at 9%. We've got Deutsche Bank coming in at 8%. We've got Bank of America Merrill Lynch coming at 6%. Well, it's actually 6.4. And then we've got Barclays coming in at 7%. Then we've got Goldman Sachs coming at 5%. Then we've got HSBC 5%, XTX Markets coming in at 4%, and Morgan Stanley coming in at 3%. That is a whopping 70% of the whole volume. Let me just repeat that again. That is 70% of the whole volume. Now, this figure is from a couple of years ago, so it's probably more than that. So, 70%. Isn't that so shocking when you actually think about that? So these top markets, right, are holding, right, literal banks worth of this the market, you know? And these are known, right, well the people that trade for them are known as market makers. And they kind of generate business with clients to make markets. Obviously they provide liquidity, right, which is one of the things that they do. So what is one of the purposes of the market maker? So the market maker is to generate business, I guess, with you as a retail trader. You're one of the customers. And obviously what they're going to do is create patterns in charts that we can recognize. And then they use liquidity providers to make markets. And basically they're there to create a trading environment that entices the retail trader to enter the market. Right? We are of no value to the market maker. Right? Unless they can entice us into the market. Then we have some value. Because although people will tell you that the banks don't care about retail, they do. Of course they do. It's free money. Whoever tells you that obviously is listening to people, along the line that they don't want you to know this. Right? They don't want you to know this. Right? And it's why retail trading is so prevalent in today's trading industry. I mean, there are a lot of alternative kind of trading systems coming out there, but most of it is the same stuff as retail trading, especially in the forex market. It's even worse in the forex market, right? I mean, come on, it's happened to all of us, right? We thought we're in a perfect trade, nothing can go wrong. This is optimal trade, everything's going perfect, great entry, and the position's in profit, right? You add a few more positions, or you start taking a bit of profit, and then before you know it, the market swings in the opposite direction. You panic and you don't want to blow your account. You cut the trade, and then it ends up going in your favor anyway. All right, that is market. You can call it manipulation if you want, but it's not always manipulation. Sometimes it's just the swings and roundabouts of the market itself. It's there to shake liquidity around. You know what I mean? It's there to move liquidity. Sometimes you get stuck in a retail trap, but some people lose money and they start, oh, it's the market makers, it's the market makers, the market makers' fault, it's the market makers' fault. No, they were definitely in the market. They're not after you. They're after optimal retail trades. That's what they're after. It's free liquidity. It's like finding that 20 quid on the floor. Like I've said a few times, that analogy of the £20. So why do they need to target retail traders? So one of the reasons is that it minimizes their transaction costs for facilitating a trade. So, and it also stops them pushing price up when they've got a lot of orders to fill. Sometimes they work between each other and kind of, I guess, swap contracts, within the market. If your friend's getting in at a certain time, you both get in. You're giving that instant liquidity. The market hasn't got to go around searching for that liquidity, searching for that equilibrium, the agreement between the buyers and sellers. So obviously, if they can get people in all at once and get that liquidity provided to them, they need 1 million shares that they're going to offload. They need somebody to buy those shares. So then they'll target a retail area to get that liquidity instantly. It's cheaper for them. It makes sense. Again, it's that £20 on the floor. It's that £20 on the floor. So when people say market makers, a lot of the time it's a computer. Right, it's a computer because people don't press buttons anymore in these markets. It's all algorithmic, computer based. Yeah, there's people that still do it, but the majority it's not. It's all computer generated, and this is the problem. Retail traders see this market of 7 trillion a day as something that they can get rich quick. So they're very predictable indeed. So the banks and financial institutions can target these areas whilst kind of initiating their own kind of duties within the market. They don't really look for it, but they can print a range and print a pattern within that range, knowing everybody's gonna jump in, because they don't look at candlestick charts. You know what I mean? They don't look at it. And this is the thing that people don't understand is patience. Everybody wants quick money. Right, when you need patience, simplicity and patience is the enemy of most retail traders. And that is a fact. I mean, you can go on websites, right, and you can see that these big banks actually say on the website that their unique set of capabilities and tools are designed to drive down the cost of transactions, helping their clients meet the liquidity needs of asset managers, banks, brokers, dealers, hedge funds, government agencies, and public pension programs. What does that tell you about what they are doing within the market? What does that tell you about it? That to me speaks volume when I hear that, because I'm like, whoa, wait a minute. Well, we know how they're keeping the costs down. We know how they're doing it. We know exactly what they're doing. And for them, it's all about providing that instant, easy liquidity that the cost is driven down on, and it's the most kept secret in the world, like I've said. So what are some of the ways that they're going to target retail? So it's obviously through patterns, but then there's also a thing that they catch reaction traders, emotional traders. They know that, say, if they're executing in a volatile market, they'll know if they, kind of sell to buy or buy to sell, drop price down really quick. They know that they're going to get a load of emotional retail traders jump in the market and throw orders at the market. You imagine you do that at around a level of support or resistance or a key level, you're in the money. And this is the thing, a lot of traders lack simple logic to be able to work these things out. Because once you find a little bit and somebody tells you just a little bit, you don't need much else to be able to understand these concepts and how deep they go and, what the actual truth of this market is. Because this is what they're doing. They're shaking the market. That's why short-term money is harder to get than long-term money. But everybody wants to get rich fast. Nobody wants to get rich slow. And that's the major problem. So let's go through another problem within the retail trading industry, and this is one of the main manipulation. And this is like the basics of manipulation. So when a retail trader places an order through a broker, the broker transfers all these orders into an order management system, and a lot of these brokers will sell this information where a market maker can use this information and put it through an algorithm that will make specific patterns in the market according to where retail traders have their orders. Now, you imagine a company like IG, which have some of the most clients in the whole of this trading space. That information is very valuable. If you can find, let's say, 30% of their clients are taking a particular setup, that's probably not far off from 30% of all traders, because, it's that kind of mass psychology is very similar, isn't it? You know what I mean? So your order's going through, right? A friggin' algorithm that knows your entry, stop loss, and take profit, right? And obviously this algorithm is going to fluctuate according to the mass amount of orders, so where the mass amount of stop losses are, where the mass amount of take profits are, or entries, whatever it is, and that's because the retail have this herd mentality, speculating. That's the problem. And a lot of people won't believe this for some reason. I don't know what it is. People, even professionals, will say the market's not rigged. It's not rigged. It's not rigged. It's just badly structured. You know what I mean? No, the market's rigged. It's rigged. Of course, it's rigged. When is anything in life, right, that's kind of come from an authoritarian power not rigged? Excuse me. So when is it not rigged? And this is the thing. It's called the dealer's desk. They know everything. And the whole idea is they want to go against retail. Come on, if you're a retailer trader, you go in the market, it always does the opposite thing than what you want it to actually do. And this is the thing, nobody wants to talk about this for some reason. I don't know why. It's the same thing. News, reactions to news, yeah, were hyped up, right? Because they can get exploited. What happens during news? The orders can't get fulfilled, so there's a lack of liquidity. The spread goes up, right? The spread goes up, and what does that happen? It mashes up the breakout traders, the trendline traders. Why? Because they're trying to catch this fast money, And people think stop hunts are something that happens all the time. I mean, stop hunt is something that happens in a mass retail area. If you're going on YouTube, getting strategies from there, you're gonna get hit by them all the time. And it's not like they're targeting you, right? They're just picking up free money, right? You're getting caught in traps, two-way traps, three-way traps. It's very easy. They can just program the market to be choppy. It doesn't affect them. They're gaining from it. But people see these rallies and they'll just jump in without no confirmations, looking at charts, see price going up, get FOMO and jump in. They know how to play on human psychology, and they've got machines that do it. Machines. And this is the thing, right? News plays a massive part in the manipulation because it's an area that can be concentrated with a lot of traders all jumping in at the same time, all going towards a bias. Unless you know what you're doing, all going towards a bias. That is a gold mine for these guys, man. Absolute gold mine. Study the movements on news and you will see how it happens. It's an absolute gold mine. But people don't realize this. They want to be like the guy on YouTube, following the guy on YouTube, and this is the problem. Nobody wants to. I know there are a lot of people that want to find out the truth. People think consolidation's bad. Consolidation is not bad. Consolidation is where it happens. It's where the magic happens. But we're told it's bad. We're told dojis are irrelevant. Neutral candles. We're told wicks are rejections. We're told big body candles that are massive is momentum. We actually find out what these candles mean. They're nothing what we're told. So why are we told these things? Why are we being lied to? Why are we being manipulated? Easy money. The system is never going to give us money like that. It's always going to be designed to benefit the system. And this is where you have to go deep into these kind of things. You have to go very deep. and understand cycles, not just cycles of the market, the cycles in everything. Everything's quite formal. But no, people want to go on Instagram and see that head and shoulders and all this shit. And they actually got caught the once. I remember this last year. They got caught. I think it was something to do with crypto. No, it was Tesla, and there was multiple accounts on Twitter posting the same thing, trying to get people to buy Tesla all over stock twits. And the algorithm must have messed up because it started like I don't think they meant. I don't think it's meant to post the exact same post. I think it like there's a variation of it, and it was posting the same post over and over and over and over and over again, all over multiple accounts, and it was like, whoa, what is going on here? And Tesla was tanking at the time, but people were going mad. I've got a bit of information, buy Tesla. It was very weird, very weird. I remember that. If anybody remembers that, share it. That was crazy. But yeah, this is the problem, all this stuff like that. It is hard to see what's true, And I know I say people are too stupid, but people are too stupid when the truth's in front of their face. That's what the issue is. If you don't know this and you're finding out now, there should be a turning point for you. You should say, this is no more now. No more bullshit. No, it's not going to happen no more. I'm going to learn this properly, and that's what you should be saying to yourself. That's what I'm doing. And that's what I did. But that's it for today's episode. I appreciate everybody that's listening. It's on YouTube, it's on Spotify, we're on Anchor, we're on Google, we're everywhere. Literally everywhere. Podcast, is it Podcast Republic, Radio Republic? We're on loads of different sites. I'm looking at getting it on more as well. The major views come on Spotify, so thank you for everybody that listens. Like I say, it's great information that I'm passing down. That's really helped me. So, that's what it's all about in this life, isn't it? You give some, you take some, you take some, you give some. Simple as that. But stay tuned for future episodes. I've got some very interesting things lined up. Now I'm back on the podcast game, and it's going to be good.